I wanted to understand how the time of issue for an altcoin affects its future performance. So I performed a study. I started by analyzing a snapshot of the top 200 coins on CoinMarketCap on the day immediately preceding the 2020 halving day. I took all of the coins from the snapshot and I sorted them into four groups. The first group is from the bottom year in 2019. The second group is from the crash year in 2018. The third group is the peak year coins from 2017. And the fourth group are prior cycle coins who were issued before 2017. Another snapshot was taken on the anniversary of the halving day in 2021, and all of the closing prices from that snapshot were compared to the closing prices from the opening snapshot in 2020. The starting rank for each coin in each group was also recorded. The starting ranks and returns for the test period for each coin in each group were averaged in 5 different ways. The first method included all of the coins in each group in the average for that group, both for the ranking and for the average return. The second method excluded the top 3 performers from each group in the averages. The third method only included the top 10 performers from each group. The fourth method included only the 10 middle performers from each group. And finally, the bottom 10 performers from each group were compared. The composite returns for each group were compared for each averaging method, and per each averaging method, they were ranked from 1 to 4, with 1 being the highest and 4 being the lowest. The average starting ranks for each averaging method were averaged per group to give a composite average starting rank for each group. And all of the ranking scores for the returns for each averaging method were summed to give a total score for each group across averaging methods. Out of all 4 groups, the bottom year coins ranked the worst, both in terms of returns and also in terms of starting rank, with a combined rank of 115 and a total score of 19, meaning mostly 4s, only 1 3. The next worst group were the peak year coins, with a combined score of 14 and an average ranking of 100. Second best performers were the crash year coins, with a combined score of 10 and a combined market cap rank of 105. Finally, it was found that the best performing group were the prior cycle coins, with a combined score of 7 and a combined market cap rank of 70. The original hypothesis was that coins from the prior cycle or from the past bull market are poor performers versus new fresh altcoins. However, after measuring performance in a number of different ways to root out any biases created by outliers and adding up the ranking scores from each measurement, the research suggests that the original hypothesis is not correct. The research suggests instead that the established projects from prior cycles are the highest performers on average, with projects launched in the crash year of the prior cycle in second place. The projects that launched during the peak year of the prior bull market performed worse still, while fresh coins from the bottom year on average performed the worst of all. The original hypothesis also held that lower market cap coins would outperform higher market cap coins. However, the research would suggest more nuance to this idea. The research suggests that incumbent altcoins with high market caps at the time of the halving performed better than ones with low market cap. Altcoins from the peak area of the prior bull run show the same pattern, with the higher market cap coins performing the best. However, the performance of coins released in the crash year show no correlation to market cap, while fresh altcoins from the bear market show the opposite pattern, with higher cap fresh alts performing the worst and lower cap ones performing the best. Possible explanations for underperformance of fresh altcoins relative to incumbents. 1. Less funding available for projects getting started in the bear market and less developer motivation. 2. Incumbent altcoins already have proven that they can survive and have been pre-vetted by prior cycles, attracting more confidence from investors. 3. Pre-existing altcoins have more established marketing channels and followers, generating a larger network growth rate than fresh coins. 4. There are a smaller number of incumbent altcoins in the top 200 to split liquidity from risk-averse investors, and more investors are risk-averse than risk-intolerant. 5. Investors are more likely to sell an unproven altcoin when in profit, as it is viewed as more speculative, putting downward pressure on the price into a run. Possible explanations for performance of peak year and crash year coins over fresh altcoins from the bear market. 1. Coins launched during the peak year of the previous cycle would have had access to abundant liquidity and venture capital to pay developers throughout the bear market and into the next bull run. 2. Coins launched during the peak of the prior cycle would have an additional year to plan marketing and develop the project, providing a better platform for growth. 3. Coins launching in the following bear market would have not had either of these advantages, instead tending to produce a lower quality launch with a higher rate of rugs. 4. Both the peak year and crash year contained more overall liquidity than the bottom year, and so coins launching in these years had these advantages. 5. The crash year is actually the year that contained the true peak of available liquidity, as it contained the market top and alt season. Possible problems with the study. 1. Coin's performance following the halving anniversary was not tracked, so total cycle performance was not compared. 2. The top 200 coins were the only ones comprising the study, and it is possible projects starting from lower valuations performed better. The results of this study would indicate that the best picks are high quality, high performing altcoins from prior cycles, while more speculative picks could be chosen from coins that were issued during the crash year. However, peak year coins should be avoided due to potentially being overfunded at launch, and bottom year coins should be avoided due to poor quality and underfunding. Not financial advice.